Hey everyone, Tommy Doerfler here with the Lighthouse Wealth Group podcast, Spotlight podcast. We have Sam Rice here as well.
Welcome.
So thanks everybody for joining, and we're going to be talking about today's topic, which is billionaires. So before we just got started here, Sam asked me, he said, okay, so why do you want to talk about this? And I thought, well, it's kind of intriguing. I think there's a mystique to a lot of billionaires and what they do and what they have access to, and especially in regards of investments. And so I thought, you know what, let's just take that one head on and talk about what we've seen and a lot of statistics out there as well. And so we want to really dive into that. So again, thanks for joining. But, where do billionaires come from? That's the first question.
It seems like from the research that we came up with, as you would expect, most are self-made, about 2/3. But I think I was surprised that even 1/3 was inherited. I would have thought more would be just all self-made. I think the days ago of royalty and political dynasties are not as prevalent anymore, where you've got business owners, tech giants, just creating mass amounts of wealth, within one generation. And that's what the statistics have shown, actually.
Yeah, it is interesting that they had about 1/3 of those billionaires inheriting that money, just because, the baby boomer generation, they're getting older and they're passing away. And so that was typically a generation that took risk. That was able to go out there and start something and build something. There are over 3,000 billionaires in the world today.
Wow.
And about 900 live here in the U.S. And so the United States leads with the most billionaires here. So it just kind of does prove to you, even though our country's not perfect, we still have great opportunity here, which I love.
Honestly, I thought there'd be more in the United States and less throughout the rest of the world. Yeah, I thought there'd probably be like half, but pretty close.
Yeah. Well, it's built on the fundamental of entrepreneurship. And so that's where, if you want to grow a vast amount of wealth within one generation, it's not going to be the high profile jobs. Not to say that you can't make a great living and accumulate wealth by being the doctor, the lawyer, whatever it may be.
Yeah.
But I think true wealth in a massive sense really comes from building something and just being an entrepreneur.
I think also with the rise of AI, I think you're going to see, honestly, even more of this, and the capabilities of a smaller amount of people doing big things than ever before. And it's interesting, you talk to your parents and, their idea of setting their kids up for life is, get them into law school, get them in med school, some profession like that. And, it's almost like becoming an entrepreneur and having a great idea that you can scale effectively and quickly is like the new thing. And I mean, that's the only reason you've seen some of these first generation billionaires scale in 15 or 20 years to multiple hundreds of billions of dollars of net worth with some of these tech companies, which once you create a great platform or a service, it's not like you need more manpower to implement that. It's just, you uploaded software.
Well, I think obviously with the use of AI, that's going to escalate things, right?
I think so.
It's going to certainly escalate a lot of things. But at the end of the day, these founders are still finding solutions to larger unaddressed problems.
Yep.
And so when you do that, that's when the market really takes off and says, okay, you've solved something that the market didn't have before. So now they're creating this and they know how to take care of it, such as reinvesting money back into the business.
Yeah.
How do you scale that? How do you learn? And it's really on the job training. For a lot of entrepreneurs, it's on the job training. You start out doing one thing and solving an issue, and then all of a sudden, the one issue that sparked something that was really good sparked 4 other problems. Now you've got to be able to learn to solve those things, and then so on.
Well, I think, and it still blows my parents' minds. I'm sure you've probably had this conversation with your parents as well, that, some of the wealthiest people aren't doctors or lawyers.
Mm-hmm.
They started companies from nothing. Maybe they had a sales background, so they know how to sell, present a solution. And I think it's the most wealth I've seen for many individuals is they started up in some industry, some company, and they saw inefficiencies within that system, within that company, and they addressed them independently and then just created their competitor.
Yeah.
And
essentially they bet on themselves. I mean, that's what they did.
Yep.
And so I think there's a misnomer out there that billionaires, know more than they know, or that they're really smart people. Some of them would even say like, hey, I'm the smartest guy in the room. I just was willing to take the risk, and they bet on themselves. And so it's interesting because you touched back on tech. And obviously we're going to see a rise in AI and this, the technology industry, but over 80% of self-made billionaires actually just made their fortune in traditional sectors, things like industrials, consumer goods, logistics, not necessarily just crypto or apps or anything like that.
Yeah.
And so, it's not to say that there's not money into those things, but I think if you look at something outside of that, it tends to be a little bit more sustainable long-term.
Well, I think that's also interesting as well, like industrials and consumer goods. They're kind of tertiary fields to technology, right? You've got raw natural resources that those have expanded. Maybe it's oil and gas, but certainly the semiconductor market, all of those raw materials that have to come from somewhere, lithium, and then consumer goods, right? All that stuff gets put into them at some point.
Yeah.
And we are a consumer culture. And as we've seen with Amazon, it's never been easier to buy something from your computer or phone, and things just magically show up at your doorstep every other day.
One click button. Ingenious is that one click, and it can be there within a day or two, which is dangerous too. And this is what I love is when people take that risk and they become successful doing it, they typically have, the bug to do it again. Let me see if I can recreate something else. And so, I see that a lot with entrepreneurs. They're out of the box thinkers. They're problem solvers. They want to take risk. They're willing to take chances. And, you do that enough times, then hopefully something's going to strike.
I think, as you were alluding to, most of these billionaires have had, if not exited multiple companies, currently own multiple companies.
Yeah.
Whether they're complementary or they've moved to a couple different sectors that maybe have a same platform, but maybe couldn't be applied to a couple different sectors.
So with them betting on themselves, one thing we got to talk about are, what do they do with their money? And so in the beginning phase, if an entrepreneur has some level of success, the thing they're doing is they're saying, hey man, this thing is feeding me pretty well here. I need to put this money back into the business to continue to grow. And so ownership, I think, is the key to becoming a billionaire, is having some form of ownership in something. And so what that really means in our world is that they are putting their money on a single stock, which is their business. That's it. They're concentrated. They're not diversified. They're taking all the risk and saying, hey, if I'm going to make any money, I'm going to reinvest this back in the business to see if it can grow even more and more and more. And so they're so concentrated in just a one thing. I remember telling that to an entrepreneur that had his own business. I said, basically, you're investing in one stock. That's your stock. And you're putting all your money into that.
I think that's one of the interesting planning hurdles that we have to help clients with sometimes, small business owners that may exit for millions of dollars, hundreds of millions or billions, is taking some chips off the table. They double down on their business so many times, but hey, let's diversify this a little bit. So it's interesting to see kind of a breakup of, what they invest in. Obviously, in most cases, the number one thing is their business, but what do you do maybe after you have an exit point and you start your next business, when you're allocating maybe a smaller portion of your wealth towards getting that next business off the ground? What do you now expand into? And it's interesting. I think two of these are very common for a lot of people, which are real estate, which is always a common topic of investment, and just common stock equities and bonds, which accumulate for about 80% of portfolios. And then I think the other interesting thing is The remainder, they really like to, as they found success in their first phase of business, which is typically a private business, they're investing in other private businesses, which some can be semi-public, accessible. They're making headway into making that more available for individuals with not as high asset thresholds to be involved with. But private equity is a huge portion, getting involved with earlier stage companies before they make big moves, and they can get kind of on the ground floor of those is that really that big third phase of that non-market correlated growth that they're trying to get from their portfolios.
Because the first thing you do is you build, create, and sell one company. You want to do it again, right? But maybe you don't want to say, hey, I don't want this put on my shoulders the entire time. I want somebody else to carry the weight, but I'm willing to, invest some capital into somebody else for somebody else to carry that weight and see what they can do. And so they immediately want to replicate that and say, hey, I did this once. Now can I do it again?
Well, and there's a lot of great companies out there that this is what they do, right? They loan money out to earlier stage companies, whether it's not that person directly, maybe investing $100,000 or $1 million into a company that's maybe their buddy's company, something like that. There's companies like Apollo, KKR, things of that nature, that's their whole business, is finding those companies that are at multiple stages of growth, really doing their due diligence and being that filter and management for individuals to invest in on the private market.
Yeah. So there's a mystique about this because people always say, hey, what do billionaires have access to? They have access to different investments and so on. And it's not that, the private equity market is always better, because in our world, investments, that comes and goes, right? You can't view it like that. But at the same time, sometimes you have to have a lot more money up front to be able to invest in things. And so I've seen people with money go both those directions. I mean, I've seen people that say, hey, I built a company, sold a company, did wonderful. Now I want to invest in private equity. I want to see if I can do this again. And then I've seen other people that take their wealth and say, you know what? I don't need to do that. The S&P 500 index, I'm just fine with that. Anybody can invest in,
or go super conservative.
Yeah,
even
or go
more
super
so
conservative.
Than even the index. Yeah.
But the point is with this, a lot of people think of this private equity as, oh, this is mystique. And to a certain degree it is, but you just got to know what it is before going into it. And I think the risk level for people that are billionaires are much higher. If you look and say, okay, if I had $1 billion, right, and I throw $1 million at something, it doesn't work, my life's going to move on. It's not going to affect your lifestyle.
How much is that going to affect me?
Yeah, it's not going to affect your lifestyle. But if you have $1 million and you throw it 100,000 at something, that's going to have a much more dramatic effect on your net worth. That's 10% gone, so to speak. And so that's where I think billionaires are willing to take a lot more risk and get into things like that private equity, where you have to typically lock money up or have a higher amount to start with, or even be qualified enough to do it, because there are risks associated with that. But, complex doesn't always mean better. And so
that's right.
The point of this is just to say, like, this is very individualized. We're generalizing with this. And so a lot of people will choose to go in either of those directions. These entrepreneurs, they basically see risk as not something to necessarily avoid, but something to understand and control. And that's what I think separates them from...
That's a good way to put it.
Yeah, from somebody who's just working as an employee. If you're just working as an employee, you want, consistent paycheck.
Cash flow from income. Paycheck.
You don't want that just because of security. Yeah. Where entrepreneurs are saying, hey, that's not, I'm willing to give that up to try something else to make it bigger than what I could do, as an employee.
I think that's interesting. I mean, I think any entrepreneur has a good understanding of risk, not only to themselves personally, right? Because in many cases, if you're an entrepreneur, the business also falls back on you. So a good personal understanding of risk, and then also as the business, what to take on a business side, and then, with their own personal investing, also understanding those risks, be betting on themselves, but also being able to take chips off the table and maybe gain exposure to something that's not as available that they had exposure to in the past.
Yeah. And I love it because in our industry, with wealth advisors, there's always this thing called imposter syndrome that, if you get the room with someone who has a large amount of money, you're normally, a little nervous or
what might they ask me that I don't know about?
Yeah. And I think what we've realized is no, it doesn't mean that there's the smartest person in the room. Not to say that they can't be, but I mean, we've met people that have sold businesses and they won't want to put their money anywhere except for a bank, maybe, that are somewhat conspiracy theorists, and you're like,
yeah.
I don't know if that's stewarding your money the right way or your wealth the right way.
You're acting like my grandparents with money.
Yeah. Or on the other side,
get you off the ledge.
Yeah. On the other side, are reckless. And so they need a little bit of somebody to rein them back in and say, hey, listen, you created something phenomenal. Let's not mess that up. And so you have everybody somewhere in between that. But I think for a lot of advisors, it's just this, oh man, they've got a lot of money. They sold a business and they know so much. And what are they going to know that I don't know? And the reality is maybe not.
Same conversations, just different scales.
And it always comes back to that question, do I have enough?
If you had more.
Can I sustain this lifestyle? Is this sustainable? But there are certain fears that the billionaires have that some people don't, because in their world, they don't have a retirement issue. There's no such thing as, am I going to retire? It's a tax issue.
How much can I keep?
It's an estate issue.
Yeah.
And some of the other things are inflation. That erodes purchasing power. That's kind of the silent killer of your wealth.
I would say in a lot of cases, there's probably a lot of privately held company stock in a large portion of these cases, where it's like, that's almost, hey, how do I manage this? I can only sell this in certain periods of the year. Am I very concentrated? I mean, man, if you were a Tesla executive, you could be taking 40% net worth drops every 6 months, riding that roller coaster. So again, like concentration risk.
The other thing is geopolitical risk, government regulation. I mean, if there's
tariffs,
a billionaire, tariffs. If there's a billionaire that says, hey, who can change the rules? We know the market can't change the rules, so to speak, but the government can. Nobody wants that. Will that
affect your company? Maybe any trade policies that may change? If you're a billionaire, you probably have an international company in many cases. How could those political risks change the trajectory of your company?
But I think one of the biggest risks they have is litigation risk.
Oh, yeah.
That's being a target. People know you have money. And listen, we're a very sue-happy society, right? I think we know that. And so there are people who just sue just for the heck of it to try to extort money from you. And, they see that, hey, you have deep pockets, so let's see if we can get a chunk of change by doing that. And so, especially now with phones and social media, I mean, everything's real time.
Oh my gosh. Yeah.
Everything is.
I can't even imagine, being at the mercy of something that you tweeted from maybe 10 years ago.
Yeah. Exactly. That'd be a little scary. So they have to look out for that, right?
Yeah.
And so they have to wonder, saying, hey, am I, a target here? Is someone to see that and see opportunity? And those things have happened, and they will continue to happen to some degree.
Good insurance, good lawyers.
And then they spend a lot of money on those things, right? And that's never fun. So now let's talk about family dynamics. This is where it's going to get interesting. So, what we have in this intergenerational wealth that we're kind of in the midst of, or in the beginning phase of, just because so many baby boomer folks are passing, is that you're going to have this huge amount of wealth transfer. And so now family dynamics become more important than ever. And what I mean by that, there's this proverb that basically says shirt sleeves to shirt sleeves in 3 generations, right? And so you have the first generation, and they are the risk takers, the ones that find a solution to a problem. They form a business, they take that risk, they build something, they give their blood, sweat, and tears to continue building it. They typically sacrifice their family time. They can generally be good, husbands, wives, or so on, but there's a sacrifice there that they tend to make in their family. And then what they do is they start making money, and then they don't have conversations. They kind of shield that from the second generation.
Yeah.
So typically what happens, you have this first generation building this saying, hey, and both of us are fathers, so we know this, you always want to give your kids the best opportunity possible. Yeah. Maybe even something that you didn't have growing up. And
even so maybe at the detriment of your family.
So you do that, and all of a sudden you don't have those same values being instilled, right? Because it's, hey, I want to see my kids go to a good college. I want to see them to do this, but they don't understand the story and the value system that created that wealth, which was
not having to work for it.
So these aren't topics that families are talking about.
No, and so I certainly wasn't talked about mine.
So you have this dynamic, and it's a matter of saying, hey, we don't talk about money. We want to shield the kids from money. Hey, we don't want them to come up spoiled or have no value system in place, but they're also not telling that story of what that value system was for them, how they created that wealth.
Yeah.
And that's what I think a lot of times younger generations need to hear is just the story. They don't need the condescending point the finger, just do this, just do this. They need education. They need understanding. They need to hear those stories of how did this get created, And so if you do that right, then you don't have to worry about the third generation, because by not having those conversations, the second generation grows up in that world of, hey, I went to the nice schools. I got the nice car when I was younger.
I deserve all this.
And they pass that on. And that's where the wealth is typically lost in that third generation. So, what we do is we try to have conversations with the family, hearing the value system and hearing, hey, here's purposeful planning. But really the second generation is saying, hey, how do we steward what has already been created? How do we steward this? How do we be responsible and say, hey, we've got a responsibility for this? Where do we want to do this? Where do we feel obligated, whether it's giving, putting money into philanthropy? I know that's a big one for a lot of folks, a lot of billionaires, is that philanthropy. What does it mean to steward this? That's what people in the younger generations need to really have, saying, hey, there's purpose behind this. This isn't just, okay, hey, you get handed over the keys to the Maserati, now go wherever you want as fast as you want to go. It's no, you've been handed the keys. Now, how do we take care of this? What does that look like?
Or we're starting an account for you that's based off your own saving, your own working, your own philanthropy wishes, like getting your kids in giving at an early age, understanding budgeting, chores. I mean, those things are building blocks. I know we've seen a lot of clients when they've started accounts and involved their kids at an early age, investing, saving. They think it's so cool. And then they get to a point in their life where now we get to have adult conversations with them without their parents, because they're, of age now. And they've really continued that legacy and purpose with the money. They want to continue saving. They want to continue building wealth. They want to continue investing, rather than trying to pull the money out and buy a motorcycle or something.
Yes, they want to preserve the values. That's what it's meant to do, is be able to have impact. Philanthropy is definitely a legacy lever. And I think the Bill Gates Foundation, and you've heard Warren Buffett say, hey, I'm going to give away, I think it's like 90% of his wealth.
Pretty much all of his wealth.
And so they're doing that because, one, they realize, hey, I don't need it. My family doesn't need it. This is a ridiculous amount. It's better used to be able to put and give to something else, right? And build, whether it's the economy or other areas or philanthropy, whatever it may be. But they see that desire to be able to do things and have a much greater impact through generation
than being eaten up with estate taxes.
Estate taxes, or just self-interest, just total self-interest. And that's where I think, taxes and estate planning, that's really is the lifeblood of a lot of billionaires, to say, hey, how do I give less money to the government? Because I think we're all in agreement there that they're not really fiduciaries. And at the same time, how do we preserve this in a way that we can hand this down and, create this stream? I always use this analogy in some of these conversations we have, but it's like, hey, it's, the first generation created the stream, right? And they created in a creek. And then, when they needed to, they'd go to the creek and they'd get the water they would need. And what you want to do is every time it's passed down, you want to leave that bigger for the next generation. So the creek then becomes a river. And saying, great, we've got more, we don't need all the water. We're not going to be thirsty 100% of the time, all the time. But you know what? Maybe we see others in need. Maybe they need some water. Yeah. Let's go to the river here and produce.
There's a lot of people in need.
Exactly.
That have hard times.
So, it's not easy. And I think the marriages as well, and just kind of shifting here to the family dynamics.
Protecting from that.
It's hard. It's really hard. And, especially between spouses.
Things you don't want to have to plan for, but it's a reality of life sometimes.
Well, not only that, but it's, all of a sudden, if one person if you get married, the dynamics change because all of a sudden, let's say you just strike oil. Now there's a sense of freedom, autonomy, and all these doors open up that you've never had before. And as a marriage, how do you deal with that? How do you deal with it together? Where are your values? That's where these things come alive, where all of a sudden you're thrust into this whole new financial situation. How do you agree on what to do with it with another person in your life? That's not easy.
No. That's some family dynamics right there.
Yeah, exactly. And so even with the kids and stuff like that, I mean, just so much more opens up and it's harder to have those values. If a kid says, hey, can I go ahead and, buy a Ferrari at the age of 16? And you're thinking, well, yeah, it's not a lot of money to us, but are we really setting the right example by doing that? Can you? Yeah, you can. But is that really what you're trying to set?
Yeah.
Where
is that going to be a good choice?
Is that going to be a good choice? Where people, that don't have this large, vast amount of money, they don't have to worry about it. It's like we don't even have to talk about that.
It's not even an option.
Yeah,
that's right.
As we wrap up here today, I think hopefully we uncovered some of the things that we've seen with these billionaires, and last thing we want to do is celebritize anybody. But the point of this, talking through this, was to say, hey, listen, nobody has it all. Everybody in every facet of life have difficulties no matter what. What you see on the TV is not always the real life. And so there are issues and problems that come with having a vast amount of money. And it's not always easy if you do it right. Because the easier you think it is, you're probably doing it wrong.
Managing a successful life is not easy, and it's work. You've got your own career, work life that's challenging in most cases for many people. And then you've got this other side of your whole life, which is your family, your personal life. And maybe you've got another larger part of that family life that encompasses billions of dollars that can really complicate things in some cases.
Exactly. So, I think that's where we're going to land with this episode today. I just want to say thank you for listening. Again, Sam Rice and Tommy Doerfler with the Lighthouse Wealth Group Spotlight Podcast. We will see you next time.
See you then.